What is really happening in Japan and why does it matter to XRP holders? In the fast moving world of cryptocurrency, some of the most important developments happen quietly, far away from social media hype and price speculation. One of those developments may now be unfolding in Japan and South Korea, two of Asia's most powerful financial hubs. According to Japanese financial commentator Yuto Kanzaki, behind the scenes discussions about joint blockchain projects could signal a major turning point for Ripple and XRP. While these talks have not yet been officially announced, their implications could be massive. When combined with Japan's upcoming regulatory clarity, Ripple's long term investment strategy in the region, and increasing institutional participation in the XRP ledger, a much bigger picture begins to emerge. One that XRP holders cannot afford to ignore. So, are Japan and South Korea quietly building a shared blockchain future? Japan and South Korea are not just neighboring countries. They are financial powerhouses with deep influence across Asia's technology and banking sector. According to Kanzaki, the two nations are quietly discussing joint blockchain infrastructure projects, suggesting something far more serious than experimental pilot programs. From a market impact perspective, this kind of cooperation signals long term institutional commitment. When governments explore shared blockchain systems, the focus usually includes cross border payments, settlement efficiency, and enterprise grade solutions, all areas where Ripple and the XRP ledger already excel. If these talks materialize into official initiatives, it could position Ripple as a core infrastructure provider, not just another blockchain company competing for attention. So, how could joint blockchain infrastructure reshape Asia's financial markets? Joint blockchain infrastructure between Japan and South Korea could dramatically reduce friction in cross border financial operations. Traditional settlement systems are slow, expensive, and fragmented, while blockchain based solutions offer speed, transparency, and cost efficiency. For the crypto market, this kind of government backed alignment often acts as a confidence multiplier. Institutional investors are more likely to adopt technologies that are supported or at least clearly regulated by major economies. If Ripple's technology becomes embedded in these systems, demand for XRP as a liquidity bridge asset could increase significantly, strengthening its utility driven value rather than speculative price action. So, is Japan finally providing regulatory clarity for Ripple services? On December 2, Kanzaki revealed that Japan plans to introduce new regulations specifically affecting Ripple Prime and Ripple Custody. This is a critical development because regulatory clarity is one of the biggest barriers to institutional crypto adoption. Once these services are fully recognized under Japan's digital asset framework, Ripple can legally expand its offering to banks, asset managers, and large enterprises. From a market standpoint, regulation doesn't stifle growth, it often unlocks it. Clear rules reduce uncertainty, attract institutional capital, and legitimize blockchain solutions in traditional finance environments. So, why is Ripple's XRPL Japan and Korea fund so important? Ripple's strategy in Asia did not begin overnight. In mid 2024, the company committed a significant portion of its 1 billion XRP pledge to the XRPL Japan and Korea fund. This fund targets four major areas, which are partnerships, project support, startup investment, and blockchain education. From a market impact perspective, this fund represents infrastructure first thinking. Instead of chasing short term hype, Ripple is building ecosystems, encouraging real-world use cases, and nurturing developer communities. Investments that could reach tens of millions of dollars demonstrate confidence, not speculation, in Asia's long-term blockchain future. So, how does growing validator participation strengthen the XRP ledger? A blockchain's credibility depends heavily on its validator network, especially in regulated markets. In South Korea, regulated provider Infinite Block became an XRPL validator, supporting compliant corporate services. In Japan, SBI VC Trade, a major financial player, also joined as a validator. These developments strengthen the XRPL or XRP ledger by increasing decentralization, network security, and institutional trust. For the market, this sends a strong signal. XRPL is not just technically capable, but also institutionally acceptable in some of the world's strictest regulatory environments. So, what does all of this mean for XRP holders right now? When you combine private government discussions, advancing regulation, strategic XRP investment funds, and validator expansion, a clear pattern emerges. This is not random activity. It is coordinated ecosystem building. For XRP holders, this convergence suggests that adoption is moving from theory to implementation. If Japan and South Korea proceed with joint blockchain initiatives, Ripple's early positioning could allow XRP to play a central role in liquidity and settlement systems, potentially increasing long-term demand and relevance. And finally, my own personal opinion about this is that what we are seeing right now is the quiet phase before broader recognition. The crypto market often reacts too late because it focuses on price rather than infrastructure development. Japan and South Korea moving towards shared blockchain solutions, while Ripple quietly secures regulatory approval and institutional partnerships, feels like a strategic masterclass. This doesn't guarantee immediate price explosions, but it strongly supports the idea that XRP is being positioned for real-world utility at scale. For long-term holders, these developments are far more meaningful than short-term market noise. And this finally ends our video. Thank you very much for watching and see you on the next one.